I would like to thank you for logging into this webinar. My name is Joseph Mhlabi, and co-hosting this event with me is Mr. Tafi Nyamazana. I think we have reasonable attendance on the session already, so we would like to proceed. I'd like to welcome you and thank you for joining this session on risk management trends in Zimbabwe survey results. It is imperative that we understand the territory we operate in and the changes and trends therein if we are to have the impact we aspire to have as a profession. This meeting could not have come at a more appropriate time for the risk management profession in Zimbabwe. We are witnessing a growing interest in risk management, and a properly researched view on the state of affairs will be quite instructive. It is my pleasure to welcome especially those who are joining us from outside Zimbabwe's borders, that include but are not limited to the team joining us from the IRM UK, who are also providing tremendous support to make this event possible and provide the platform for an efficient meeting. We welcome friends from outside Zimbabwe who are associated with the Zimbabwe Regional Interest Group and are keen to see the developments in our space. Just to speak to some ground rules, we will ask that we keep our mics off throughout all proceedings until we get to the Q&A session, and only unmute when you have been asked to unmute and you've been given the authority to speak, so that we don't speak over each other. There is a chat function that I believe we can use to record questions and significant comments that you would like for the attendants, the participants to know, and questions that you'd like answered. We have provided for a question and answer session at the end or towards the end of this meeting. We would like as much as possible to progress with a smooth flow of the various presentations. So as the process, as the various presenters are speaking to us, if you have questions at the time they are still fresh and clear in your mind, please log them onto the chat function or make notes so that we speak to them at the end of the presentation. The content of this webinar is, for me, an exciting lineup. We will have a starter from Carolyn Williams that speaks to background issues relating to the separation of risk management within organizations, followed by the unpacking of the two competently researched and well-compiled survey results. It is my pleasure at this point to ask my co-presenter, Mr. Nyamazana, to take us through the introduction of the first panel speaker. Over to you, Tafi. Thank you.
Hello, can you hear me now?
Yes, we can hear you, Tafi.
Oh, okay. Good afternoon, ladies and gentlemen, or is it evening? Thank you very much for coming on board. And like what Joy has said, we are going to have what we can call a starter in this discussion. I'll just ask Caroline to please go ahead and introduce yourself to the team. I'm sorry, I was having some network challenges this side. Please go ahead, Carol.
Hello, everyone. Hopefully you can hear me okay.
Yes, yes, we can.
Good. My name's Carolyn Williams, and until recently I was the Director of Corporate Relations at the Institute of Risk Management. I have actually retired now because I really am that old, but I'm delighted to come back and to keep in touch with everybody and to see how some of the projects that were started when I was still at work are blossoming and coming to fruition. So it's always good to get back and to talk to people. Facebook recently reminded me that it was exactly 2 years ago that I was in Zimbabwe, in Harare, at the meeting of the Zimbabwe group, which was an amazing occasion. So it's lovely to sort of pick up and to see where we've got 2 years on, and haven't they been a tumultuous couple of years? Now, I think we've got, if I can ask my fellow panelists to mute if they're not, because they're not speaking, because I'm getting quite a lot of background noise coming in. That's better. Lovely. Thank you very much. Right, I've been asked to talk particularly about 3 things this afternoon. A little bit about what is risk management. I mean, I can't see you. I don't know how many of you are already IRM members, how many of you are visitors for today. A little bit about why should risk management be a separate function, and also a bit of background to the study and how it came to be. So what is risk management? What is this thing that we are all sitting here thinking about and talking about? And you in Zimbabwe are certainly not alone in this. From the point of view of IRM, which is a global organization, we see people asking these questions and going through these challenges all over the world. So we're all in this together, and that's the benefit of having a global organization where we can link things together and make progress in that way. So what is risk management? It's all about successful organizations, successful projects, successful teams. We all want to change the world in some way. We all want to make a difference and make things different in the future. And we want to achieve objectives. And risk is really anything that can stop us achieving those objectives. So it's all about the management of the organization or the management of the project. It's not just risk by itself somewhere separate away from the normal management of the business. It's something that is integrated within how the business works. So risk is anything that could stop you achieving those objectives. So that could be internal things to do with people or behavior or culture. It could be external things like the state of the economy. It could be some things that go on in the world like pandemics, or it could be weather risks. So, but all that entire universe of risk that you operate in is what we're concerned about here. Now, I know one of the things that came out of the survey was the importance of insurance and health and safety. And it's true that this is one of the places where risk management was born. It comes out of insurance. Personally, I worked for many years at Lloyd's of London, and my interest in risk came from an insurance background. And it's very true, some risks are insurable, but most risks are not insurable. They relate to these internal environmental factors, communications, behavior. You can't get insurance for those things. Even insurance, it will rarely compensate you 100%, and it will rarely compensate you on day one after something happens. You still need further mitigation measures in place. You need to understand the process there. So the risk management itself is looking at that whole degree of uncertainty that we don't know what the future is going to hold, and trying to apply some structure and some management and some logic to it, so that we can reduce the impact of uncertainty on our objectives. So going on to the second point about why should risk management be a separate function, this is to do with the maturity of risk management within organizations and within economies and across the world. The idea of risk management being separate from its usually internal audit, the question is about, comes from the 3 lines of defense model, which is very widely used across the risk and audit worlds. And I can't remember who said it, but all models are wrong, but some are useful, and it gives us some insight into how things are and how things might be. So that gives the 3 lines of defense model gives complementary roles to internal audit, to risk management, and to the line management of the organization. Some people also add extra lines. They put in external audit, they put in the board, and you have 5 lines or 4 lines. But the original thought was around the 3 lines of defense model. And that separates out a role for risk management and a role for internal audit. Now, if you like, it's the internal audit is driving the car by looking at in the rear view mirror. And that's not going to go terribly well. Risk management is driving the car looking out of the front windscreen, which is great, but you also need the rear view mirror as well at the same time. So the 2 are complementary. Now, because we can identify in the sense of a model the different roles for internal audit and risk management and the line management, that doesn't mean that it's easy to apply this in practice. In fact, it's quite hard. We sometimes say that everyone is a risk manager. So we need to have not only risk professionals, but anybody in a management role within an organization needs to be aware of risk and their role in it. Also, being realistic, some organizations are going to be too small to have 2 separate functions. Some organizations are going to be just not culturally ready because of the people and who's there in the organization. We don't start these things with a blank sheet. You have existing teams in process, and you have to work with that because you're not going to be able to sort of change it easily. So we look upon it as a journey rather than something that you just have to have there on day one. But as long as you're clear that you have a risk function and what that does, and you have an internal audit function and what that does, ultimately, yes, we would see in sophisticated organizations that can afford to put a lot of resources into risk management, we would see the 2 functions separate. But we would also see organizations who are approaching that level of maturity who haven't quite got to that yet. I mean, the most important thing that we would argue as the Institute of Risk Management is that whoever has responsibility for risk knows what they're doing. So that means actually, getting some training, getting some professional knowledge. And I know it was something that was raised in the survey as well, that this is hard, isn't it? It's not particularly easy to be able to get this training or this courses or examinations or whatever, particularly if you come from challenging environments. But everybody can read a book. Everybody can go onto the website of things like the Institute of Risk Management or IRM in South Africa, where there are lots of resources there available for free download. We can all educate ourselves as well as expecting someone else to educate us. So we have that groundwork that we can put in place. And then, yes, we aspire to develop ourselves as professionals, we aspire to take examinations, we aspire to train and to train others in due course. But everybody can start now, and everybody can do a little bit to progress themselves forward. So that's about risk management and separation of functions. Now, a little bit of background to the study. When I was in Zimbabwe 2 years ago, and I met up with the wonderful organising team that you've got there, and they were very keen to do some research into risk management within Zimbabwe, and we were delighted to see that. We have people doing this sort of thing in different territories around the world, so we were delighted to support the National University of Science and Technology, which came on board, and particularly Samantha and David, and then the organising team, Maggie and God knows, and everybody who was there, and they've done a fantastic job in approaching many contacts in industry and bringing together the information for this study. So we owe a big vote of thanks to that team. We're going to hear a bit more shortly from them and what they found. So the last thing I would say is if you're not already familiar with IRM, then various things are going on. This week, the IRM has released a report on climate change risk management, which outlines the very important role that risk professionals have in helping their organisations face the future. In advance of the COP26 conference that's taking place here in the UK in a month or so, we wanted to sort of position the risk profession as being very important in that field. So again, if you go onto the IRM website, you can download your copy of that and perhaps some other things while you're at it. So I think that's probably taken up enough of my time and your time at the moment. We want to hear more from the people who did this survey, so I'm going to stop talking now and hand back to the organiser. Thank you very much.
Thank you very much, Caroline. We still have fond memories of your visit when you came to Zimbabwe. Wish you well in your retirement. But the good thing about risk management, no one ever really quite retires from risk management, because every day you wake up from your bed, you are always facing some risks that you need to manage. But we always welcome you to contribute to the body of knowledge, and we really appreciate the support that you gave us as the regional interest group here in Zimbabwe. Without further ado, we are moving on to the next part of our program, where we are talking about unpacking of the Zimbabwe Risk Survey. Again, we thank the mother body, the UK body, which which sponsored this survey. So with us today is David and Samantha, who are going to share with us the results of that survey. Just in a nutshell, David is a seasoned academic, an actuarial and risk management expert, who is a part-time lecturer at NAST. So I think among his many things that he has been able to do, he is the project manager and lead consultant of the recently launched Zimbabwe Integrated Risk and Capital Project, ZICAP. He's also been part of the team that was selected to design the framework for the minimum board of knowledge for actuarial science degree programs in Zimbabwe. So David is together with Samantha. Samantha is a full-time lecturer at the National University of Science and Technology, who holds a BCom in Risk Management Insurance, a Master's Science in Marketing, and a postgraduate diploma in higher education. And their focus really on this area of risk management. She's got 5 publications in various journals in risk management, insurance, sustainable development in higher education. So over to the two of you to take us through what you were able to get from the research that you did, the Zimbabwe Risk Survey.
Thank you, Mr. Nyamazana. Can you hear me all?
Loud and clear, we can hear you.
All right. Thank you, ladies and gentlemen. Good evening. My name is Samantha Shannon. I've already been introduced, and I'm part of the team which carried out the research. So my job here, I just want to give you a brief background of why we set out to do the research and the objectives that we meant to achieve, and Mr. Chimsitu will unpack the results. So following the visit from Caroline and team from the IRM UK team, we set out to do a research in the Zimbabwean sector to add to the body of knowledge and to both academia and practice. And our aim was to set common ground for further study. So for that to be done, we wanted to establish whether the selected sectors in the country mean the same thing when they talk about risk management before we move forward to do any specific research. Just like what Caroline was explaining to us, that risk means different things to different people. So we wanted to establish a baseline of what selected sectors would mean when they talk risk management. So the objectives that we set out to achieve, we had 5 objectives. So our first objective was we wanted to gain an understanding of the legislation which was affecting and shaping risk management practices in Zimbabwe. And our second objective was that we wanted to investigate the level of understanding and the importance which is placed on risk management by key institutions in economic sectors which we had targeted. And these key institutions are also the key institutions which contribute to the GDP of Zimbabwe. And the third objective was we wanted to obtain an understanding of the methods and the risk management tools which are used by these key institutions in their sectors in targeting risk. What they meant what they meant when they said risk, and also what are the key tools that they use to manage these risks. And our fourth objective was that we wanted to investigate the types of qualifications of risk management professionals which are practicing in these sectors which we were targeting. And our fifth objective was that we wanted to obtain an understanding of the challenges which are being faced by risk management professionals which are practicing in these sectors which the research was targeting. So we set out to do this research over 1 year. And
sorry, Samantha.
Yes.
Are you projecting something we are not able to see from this end? If you are projecting anything?
No, the projection is going to come just now. This was just a rundown of the objectives, so that when the results are being unpacked, you can see what we were aiming to achieve.
Excellent, thanks. Please go ahead.
All right. Okay, so these are the objectives that we had set out to do, and the results are going to be presented accordingly by Mr. Chimsitu. So I'll hand over to Mr. Chimsitu now.
Okay, thank you very much, Samantha, for that overview in terms of introduction, right, and what the objectives of the research were. And a very good evening to you all, and a special thanks to the team IRM, both the Zimbabwean team and the UK team, for the support that they gave us when we're doing this research. So my job here is to then unpack the findings of this baseline survey. Like what Samantha said, it was basically gaining an understanding of the risk management practices in Zimbabwe. So one of the things that we're looking at in terms of this particular research was first to have an understanding of legislation and how it is shaping and driving risk management. So just to give an overview of the development of risk management and how it is helped by legislation, we basically looked at the different statutes and Act of Parliament and other regulators that have been enacted, and how these are shaping development for the 4 sectors that we targeted. So the sectors that we're targeting include the finance sector, which was mostly insurance and banks. We also targeted the energy sector, mining, and tourism, which at that time of doing the research was our understanding that are some of the 4 leading sectors in terms of the economic recovery of the nation. So just to give an overview of the legislative environment, we will basically touch in terms of what is happening elsewhere in terms of legislation and what is actually happening within Zimbabwe, and how this actually shaped the research that we're doing. So in terms of understanding legislation, it actually forms part of what is called your external risk management framework. And within these external risk management frameworks, you can actually look at it in terms of it consisting of 3 parts. We've got what we call mandatory frameworks, then there are advisory frameworks, and we also have got what are known as your proprietary frameworks. So legislation basically forms part of what are known as your mandatory frameworks. So in terms of these mandatory frameworks, Why you would want to look at this is because these they are sort of compulsory, and companies sort of have to strategize in order to comply with these, or they face sort of your sanctions. So in terms of your other jurisdictions, which have got to some extent also some bearing on the legislative development in Zimbabwe, you look at your mandatory frameworks, issues of the Basel Code for your banks forms part of these mandatory frameworks. Issues of your Solvency II, which is being used in Europe, also forms part of these frameworks, right? You also look at your Swiss solvency test, your Sarbanes-Oxley Act of 2002, which is basically a UK sort of legislation aimed at protecting your shareholders, right? Then you also have got frameworks like your Committee of Sponsoring Organizations of the Trade Commission, which also is used companies within the US to gauge or to demonstrate that they've got internal adequate control. So this is basically in terms of an overview of what is happening on the international market. So within the Zimbabwean market, we also aim to or ventured on to understand what are these pieces of legislations that are actually currently in existence, or those that are still in development. So risk management in Zimbabwe basically is shaped by the following legislations. These are not exhaustive, right? There are other legislations that might actually be coming up or still undergoing development. So on the insurance front, we've got the Zimbabwe Integrated Capital and Risk Program, which is basically an equivalent of Solvency II. That is really now driving the development of risk management within the insurance sector, right? So you'd understand that within this framework, it touches on both your capital requirements, also touches on both the risk management. IRM, I know one of the things that we highlighted within the research was that IRM at the moment is not yet a compulsory requirement, but with the launch of this particular framework, it has made it compulsory that insurers should have an enterprise risk management framework if they are to be compliant with the requirement for them to produce an own risk and solvency assessment report. For the banks, you have got a Basel II and Basel III. So the research what it then found out was that your insurers and your banks, they tend to be the leaders in terms of risk management because of the nature of their legislation and how it's actually driving risk management. For the other sectors, which is your energy sector and your mining sector, the focus there, because of the nature of their legislation, is still on the health and safety, right? Because these have to comply with what is known as your safety, health, environment, and quality standards, right? So the safety, health, and environmental and quality standards. So this basically is more focused on the impact of their activities on the environment, also the safety of your workplace. So the risk management within these sectors is sort of still in its initial stages, which is simply focusing on safety at the workplace and also protection of the environment. Then we've got the Corporate Governance Act and the Disaster Risk Management Bill. These mostly talk to your public institutions and how they actually should be structured from a corporate governance perspective, right? Whilst the disaster risk management sort of talks at a national level, what needs to be done in the event of a disaster striking the nation, right? Then besides legislation, you also look at advisory frameworks that also shape and help organizations. These tend to do it in terms of setting out what the principles are and what the guidelines are and what the processes are, right? That should be followed. So this includes your ISO 31000 or 3100, which sort of gives the guideline for companies that seek that particular accreditation, right? You also have got, I'm glad that it's an IRM platform. You also have got the IRM, IRMIC / alarm risk management standard as well. Then from the UK side, you also have got issues of your what they normally call the Orange Book that looks at your principles and concepts of risk management that is given by the UK Treasury. So besides this, so organizations that seek to align themselves with international best practice, they tend to look up to these particular frameworks as guiding frameworks for as a way of benchmarking whether they are on the right track. Besides this as well, you also have got a drive that also comes from other organizations like your credit rating organizations, although the use of credit ratings is still limited within the Zimbabwean environment. Although we've got a number of insurers, especially your reinsurers and banks that tend to actively seek these ratings from your global rating, global credit rating in South Africa, OEM based in UK. But when you look at organizations like your Standard & Poor's, they now have gotten a component before they give a credit rating of looking at the status of IRM or the status of your risk management within an organization as a way of gauging whether the organization is being managed well. So basically, this then gives you the overview of risk management and the environment that basically is setting the development and the pace of development for risk management. So besides this, you also look at the issue of your education, right? People have been asking if I'm sharing the screen. Let me then share my screen. I was just giving an overview in terms of legislation. Now confirm that you can see the screen that I'm sharing. Right. So we're giving the overview in terms of the legislation and how it's actually driving and shaping the screen risk management. And we've actually established that your companies operating within the finance sector, they tend to be ahead because of the legislation or the development of legislation, right? Mining, energy, and tourism, they are catching up. Mostly because companies tend to refer to best practice. Legislation tends to, in those areas, it tends to focus on health safety and also the protection of the environment. Now, we then look at the role of education. I know Carolyn, that when she was giving her opening remarks, was saying that even if it is difficult for you to obtain a qualification, but that doesn't prevent you from reading a book. So education also plays a role, especially in driving the internal transformation of organizations with regards to risk management. So we also looked at education, risk management, specific risk management education, who is providing that education, and what are some of the limitations in terms of people obtaining those particular risk management qualifications, right? I'll touch on those in a short while. Then I'll also look at the risk management challenges that are affecting corporates operating within the Zimbabwean environment, and what could have been the factors leading to sectoral differences. So you see that each sector has got its own unique challenges, but at the very basic of it, the challenges, there's just a common fabric in terms of what could be the challenges for risk management for all the sectors. Then you also have got the issue of your risk management policies and frameworks. Most of it is actually driven by legislation as well. Then you also have got the internal drive, right, and the need to align with best practices, right. We'll also touch on that before we then look at the risk management tools. Caroline also gave a highlight in terms of the role of insurance and it being the first place where risk management actually developed, right. And I would actually want to say that history would actually say that for the Romans, back then, before the concept of insurance was actually born, they used to have these friendly societies, or they would call them burial societies, right? Where people would actually come together by profession and ensure that they buy a common gravesite, ensure that they put aside monies. This was all in anticipation of the risk that you might die at some point in time, but you might not have enough resources to buy your own grave or to fund the funeral. So having recognized that risk, then people would actually come together and put together resources, which is what risk management is all about. So we look at the common risk management tools that are used within Zimbabwe, right? Of course, the bias is still towards insurance. Now, in terms of risk management education, the sectors that lead by way of education in terms of qualifications is the finance sector, for the obvious reasons that we have highlighted on the nature of regulation that you find within these sectors. So banks have to comply with your Basel codes. So now we're on Basel 3, right? Insurers have to comply with various insurance legislation, and come 2022, insurers will need to be compliant with a risk-based type supervision, which is what they're commonly calling ZICAP. And ZICAP now has got a pillar specific for risk management. So this will actually see the drive, both in terms of people acquiring risk management education qualifications, and also organizations aligning themselves in terms of structure, in terms of implementation of IRM and the likes. It is also quite interesting that this particular framework is based on the 3 lines of defense model. So which means that organizations, depending on their size, might soon have an independent risk management function. They might also, depending on their resources, we'll see some insurers also having a post for the chief risk officer, and some quality assurance as well with regards to audit and compliance within the risk management. Sectors that are lagging in terms of professional qualifications, you've got your mining sector and your energy sector. So these the focus there, because they're only looking at safety, health, and environmental requirements. You are not actually polluting the environment. Your workers are not too exposed, right? So these you tend not to have from the people that participated in the survey. We are not saying that is what is true for everyone within the mining and energy sector. Those that participated actually didn't have any professional qualifications, right? Although some of them might have been working in the risk management units of those organizations. Then we've got tourism. It has got a balance. You've got some who have got these qualifications and some who do not have the qualifications. So in terms of what could have been some of these reasons, what are some of the reasons for the low uptake generally of risk management education and training? The cost factor stands as one of the leading factors, where your participants are normally saying that it's actually quite costly for one to pursue a qualification, right? Which means that in terms of strategy, they might need to look at how do we ensure that we reach out to as many people as possible, taking into account what they can actually afford in terms of the costs. Then we also have got issues of recognition. So you get participants who say that, yes, you can have these qualifications, but these are not recognized at the organization, right? So you can obtain a qualification that no one really cares about at the organization. So this actually sort of acts as a demotivating factor, especially when you look at sectors where risk management is still developing, or where the focus of risk management is still on health and safety. Then you also have got the challenges of a narrow view of risk management, especially from a regulatory perspective. If regulations basically focus on safety and health, then it means that organizations, being organizations, right, if they haven't seen the need to go beyond health and safety, they'll just do what is necessary for them to comply, right? Unless if they are hit by a major event, then they would start looking at how best can we actually manage our risk. But at times, so at times it will be too late when you're actually then hit by that event for you to then go back and make corrective actions, right? Then you've also got your organizational structural issues, where at times your organizations might not have the necessary structures to support risk management, right? We then look at who are the main providers of education. So for now, the leading provider is the Institute of Risk Management, South Africa. Then this is followed by the Professional Risk Management International Association. Then we've got other risk management communities filling in the gap. right? In terms of now, so that is basically your education. And what we also investigated in terms of the education was to look at how did people come to know about the organizations that provide training, right? Most of it was being referred by friends, or they've done some active research. But normally word of mouth is basically doing most of the job, right? So now we then look at what are these risk management challenges that organizations face with regards to risk management. So we looked at some common challenges, which we basically summarized into about the following. One of the challenges of risk management is the failure to effectively communicate the risks that are facing the organizations to top management. Then you also look at the failure to take known risks into account. You also have got information technology infrastructure that is not appropriate for effective risk management. Then you've got failure by organizations to acknowledge that risk is a reality. Then you've got lack of appropriate training on risk management. Then organizational structures and designs that are not accommodative of risk management. Then you look at lack of commitment and support from the top. So this sort of speaks to issues of culture, right? You also have got an unsupportive organizational culture, then mismeasurement of your known risks, then use of inappropriate risk matrix, then problems of in monitoring and managing risks. Then you have got issues of trust, right? So these we basically rank them for all the sectors, right? For those that participated, I would actually want to keep emphasizing the fact that for those that participated, right? Because I know if that pool had been quite wide, obviously you might actually then see some changes, right? But for those that participated, issues of trust were placed in terms of the top. Now this speaks more to issues of culture. I know that here I'm steering a debate within the platform, but to some extent, issues of culture then tend to find themselves either as an impediment or maybe as an enabler to proper implementation of risk management, right? So trust issues comes when your low-level employees, right, at times don't feel like their voices are being heard, right? So at times they then don't actively participate. Or if there's just generally a misalignment in terms of the views from the top and also from the bottom in terms of how things are supposed to be approached. So this was actually being flagged as one of the key issues. Then this was followed by problems in monitoring and managing risks. This was also followed by the inappropriate use of risk matrices. And issues of measurement of your known risks, right? So in general, the risks that are actually being projected there, these tend to be common for all the sectors, right? But one thing that we actually found from those that participated, right, besides in some areas the regulations actually having a narrow view in terms of emphasizing on particular aspects of risk management, was the fact that for all the sectors, legislation is actually not, from those that participated, is not inhibiting the development of risk management. In fact, it's actually being viewed as an enabler, although at times it might be limited in terms of what it then focuses on. So in terms of the sectorial difference, you tend to have issues, participants who came from the mining and energy flagging more issues of trust. Then participants from the financial services and tourism flagging more issues of risk identification, right? So those were the key sectorial differences. But if you then look at it from specific sectors, let me just in project the actual research document. Hope you are all seeing the screen. I'm actually projecting here, right? So in terms of the actual states is what is actually coming in from which is actually being projected screen here. So just by looking at the different sectors, just to give you a few of these being different sector-wise and also being different from organization to organization, right? So generally, that's on the problems in monitoring and managing risks. These being flagged by your participants, right? Then the issue of your wrong use of your risk matrix as well. In some of these challenges in terms of your risk matrix will all emanate from the fact that to some extent, organizations might not be having sort of your IRM frameworks in place, because one of the requirements of an IRM framework is that the organization should have a consistent risk taxonomy, which looks at how do you define the risks, which will then help you in terms of those identifications of those risks in a common way across the organization. So when that risk taxonomy is not present within an organization, then you always have challenges of these risk identifications or classifications that being inconsistent across the organization, which again is a challenge on its own, right? Then the issue of your measurement of your non-risks as well, being flagged is the challenges as well, right? So in terms of these 14 challenges, those were the most common challenges. I'll just go to the page, got the statistics here. Those were viewed as the most common challenges from the top, which is trust issues. Then you've got your communication issues. And I also would want to highlight to the platform that to some extent also for the mining and especially for the mining and the energy, to some extent we also face the challenges accessing your sort of top level management, right? We might actually then have a different view from those that ended up participating in the research, right? So you might actually find that issues of your communication of risk might have been different, really, if sort of that profile it changed in terms of those participants. And one of the things that actually led to that was the onset of COVID. Just as research had actually commenced, then there was onset of COVID and the lockdown, so which then generally slowed down the process. Then besides these common challenges, we also sort of asked the participants to identify any additional challenges that they might be facing, and this is what is actually being projected on the screens. We've got the volatile economic environment being identified is also one of the challenges that organizations face. Then you've got the limited human resources at entity level. So this also speaks to the cost, your economic environment, and the issue of resources also speaks to the issue of cost. But however, we're not saying that every organization should have sort of a full-blown sort of framework, but there's always that issue of proportionality. And for small organizations, basically everyone has to be risk managed, even for the large organizations. Then we've got the lack of awareness of the importance of risk management, and generally the disconnect between risk management function and the rest of the organization, right? So where this normal happens, where in organizations you sort of have the risk management function sort of performing a policing role, as opposed to being fully integrated within the other arms of the organization. So this will not only be unique to the Zimbabwean environment, but tends to be a challenge really elsewhere for organizations adopting risk management, especially IRM. Then we also looked at the issue of your risk management policies and frameworks. And what we found out is that all the organizations have got some form of risk management framework and policy. What differs from organization to organization is basically the implementation of those frameworks and also what those frameworks actually focus on. But all organizations tend to have some form of risk management framework and policies in place. And these are mostly driven by the need to be compliant with your regulations at the first and foremost. Then after having complied with the legislation, then you also look at them looking at international best practice in formulation of those policies, right? one of the factors also that you also look at when you look at the driving, or what were the drivers of risk management development, you also look at the issue of your cost and loss minimization, or over and above the need to comply with regulatory requirements or aligning with international best practices. Where organizations looking at risk management is aiding them in minimizing their losses and also in cutting their costs, right? Then also you've got the issue of your continuity planning in the adaptation of your international best practices, right? So we found that all organizations, they tend to have these risk management frameworks in place, but the level of implementation differs from organization to organization and between sectors, right? And mostly these are being driven by regulatory requirements and the need for you to avoid sanctions and penalties. In terms of the tools that organizations use, we looked at insurance being the most commonly used tool. Then also we've got organizations doing subcontracting. Then for organizations within the mining and energy sectors, they tend to use, especially for the big mines, they tend to use the issue of rent a captive concept in terms of they are managing their very big risks, right? Then you've got your risk retention and financing also being used as a tool by organizations, right? So insurance is commonly used. Then you've got the issue of your subcontracting. Then rent a captive, especially for those in mining and the energy sector. So generally, in conclusion, we found that there's a need from the baseline survey. Remember, this was a baseline survey where we were just looking at what generally is happening on the ground, right? But these have to be followed by more detailed researches, sector-specific researches, to really gain that in-depth understanding as to what they're actually doing. So there's generally a need to raise awareness on the importance of risk management and also the importance of risk management training for all the sectors, right? And also there's also a need to raise awareness of the difference between risk management, insurance, safety management, training, especially for those in the mining and the energy sectors, right? Whilst insurance is one of the ways in which you manage your risks, right? Just looking at insurance might actually overlook the other aspects of risk management, right? Adoption of your IRM frameworks will go a long way in helping organizations develop their risk management and also being used as a tool for addition or creation of value for organizations, right? Then buying insurance and subcontracting were the main ways in which risk was being managed. This might not be sort of available immediately, but in time, there might also be a need to look at what could be the other additional risk transfer methods and how these can be structured within our market. So in a nutshell, these are the results from the baseline survey that we conducted in 2020, right? We allocated 30 minutes. I tried to be within the 30 minutes. So I then leave this time for Q&A. I was noticing some questions that were actually flying in as I was actually presenting. So over to you, Mr. Madziwa.
Thank you, David. Thank you, David. Thank you, Samantha. We'll have the Q&A at the end of the session for both sessions. So well done for the baseline survey. Hopefully it gives us an opportunity to move forward and also do further surveys. I'm looking forward to future surveys where we can unpack what is happening within the Zimbabwean context. I've just seen one question, but like I said, we'll deal with the questions at the end. We'll straight away move on to the survey that was done by Commercial Risk Africa, and Liz is going to talk to us about that survey. Liz is a journalist, and she's the editor of the magazine called Commercial Risk Africa. She's got a passion for Africa. She's connected to Africa. She spent much of her childhood in Nigeria and also worked in South Africa. So over to you, Liz, and you can take us through the results of your survey.
Thank you very much indeed. Can you hear me all right?
Yes, loud and clear.
Fantastic. Well, good afternoon, everybody, and thank you for giving me time to do this. As you said, I'm a journalist, so my natural forte is to listen to events, not to speak to them, but I'll do my best here. We've been conducting a survey for the past year of risk managers across the world, asking the same questions in Africa, in Asia, in the US, and across Europe. So what we wanted to do is to compare some of the results from you in Zimbabwe against those wider results that we've got. So thank you very much to all of you who've actually done our survey in the past couple of days. It's really appreciated. I thought I could start by giving you an overview, particularly from Europe, because we have actually just written the European results up. We haven't published them yet. They won't be available until the end of the month. So you've got a sneak preview on those results. And overall, the conclusion has been that 2021 has been an incredibly complicated year for risk managers in terms of their insurance programs, but they've enjoyed better fortunes when it comes to the role of risk managers and their likely roles into the future. So definitely a silver lining. For those who use the insurance market as a mitigating tool, they feel that it's shifted irretrievably in the post-pandemic world, and it has continued to harden. The other really significant result really came in the fact that they believe that changing working practices and a massive increase in data collection and analysis is also going to change the relationship between insurers and the insured, that simply won't be put back together again in the pre-2019 way. So some of those changes are here for good, is their main view. There's also a fear from risk managers across Europe that the understanding of their risks is being sacrificed by insurers as they look to drive up prices and cut capacity. So there was a concern that even those kind of good risks that are well managed are actually counting for very little when it comes to available capacity. Risk managers were revealing concern about a loss of control over the insurance buying of their programs. They know their own risks, they say, but their ability to voice that to insurers was being lost. And that's not been helped by the fact that they may have had one insurer in the past on a program, but now they're having to find 3 or 4 insurers willing to cover them to complete that same program. So basically, overall, if I look at the results from the whole survey so far, we've got about 75% of risk managers surveyed globally saying that they think their insurance rates are going to continue to rise, have hardened this year and will continue to rise into 2022. But then if you look at somewhere like Spain, 100% of the risk managers are suffering with insurance increases. And then when I come to Zimbabwe, you actually mirror the global trend at pretty much at 73.5% compared to 75% overall. So you're very much in tune with the global picture. When it comes to things like terms and conditions and also wordings and things like that, you actually say to the majority that actually you don't think your terms and conditions have changed, but that is in contrast to the global picture where 55% say that they think terms and conditions have hardened. When it comes to insurance claims, you are very much again reflected in the global survey. In Zimbabwe, 85% of you think that claims are getting more difficult to settle this year. In the global picture, it's 85.06%. So really, you're absolutely a mirror image. And in terms of what things that they are, what you're saying is kind of causing problems is sort of premium settlement times, the effect of inflation, all those things that really no surprise that that you would struggle with in Zimbabwe in the same way as the rest of the world. When you're looking for alternatives, however, globally, it's 50-50. Half of the market is looking for an alternative to traditional insurance. They're looking at captives, they're looking at cell structures, they're looking at parametric insurance, they're looking to the capital markets to fund their insurance programs. Now, that 50-50, of course, is split by those who might already have captives and things in place. So they're not considering alternatives because they've already got them. When you come to Zimbabwe, you've got 60% of you, 58.8% of you are saying that you're not considering alternatives to insurance just yet. I am just scrolling down to see the next bit of results. The next thing that we looked at was about the relationship between insurer and insured. And again, that has changed a lot this year. So for example, in Europe, if we ask, has the question between insured and broker changed? 65% think that the relationship between insureds, you guys, and your brokers has got worse. Whereas actually when they look to the relationship between insurer and insured, again, it's 51% saying it's got worse. When we come to the Zimbabwe figures, you've got 50% saying that it's got worse. In terms of your relationship with your broker, it's 47%. So again, you know, much of what's happening in Zimbabwe, maybe no surprise, but it is completely mirroring the global picture. We wanted also to look, and this is something that we have looked at every year for the past 8 years. Actually, I say that 9 years. We started this in 2013. This is our 9th survey. What we ask in every year is we ask whether certain risks have got worse or not. And this is where the results between Africa and the rest of the world often vary. Some of the risks that you are exposed to in Africa are not considered major risks in Europe, and we'll run through those a little bit. So, for example, political risk. In Europe, 71% said that they did not think political risk had increased in the past year. 29% said they did. If we come to Africa, it's a 50-50 split, with exactly 50% of you saying that the political risk environment is worse, 50% of you saying the political environment is no worse. Now that is an interesting one, because in the previous 8 years of the Africa survey, political risk has come out as the #1 risk. So it's interesting, perhaps, that this year there's a feeling that perhaps its situation has calmed. In Europe last year, for example, there was a problem with political risk because of Brexit in the UK. So they very much saw that there was a risk, but for 1 year only. We've not seen the same political risk in this past year. If I look to South Africa, however, the political risk is worse, and that's probably no surprise there. They've just had horrible riots. So you can see annual changes in these risks. When we come to financial risk, this is another one where in Africa financial risk is considered quite a huge concern. Now, interestingly, the wider figures show that 92% of people think that financial risk has worsened in the past year, and that compares with 100% in Zimbabwe. So in Zimbabwe, you are all concerned about financial risks and what the economic fallout of the pandemic might be. In Europe, A lot of them are extremely concerned about what the fallout might be, what governments might choose to do to try and reclaim all the money that they've been giving us through furlough and payment schemes and tax relief and all the things that we really loved last year. We're now having to pay for in Europe quite heavily, and that has pushed financial risk way up the risk list for Europe, but it's always been there for you guys across Africa. When we come to human resources, this is another risk that's always been high in Africa, but perhaps less so in previous years. This year, 81% of you in Zimbabwe have said that you consider it to be a high risk and that it's increased in the past year. This is compared to 75% across the wider survey. So you are more concerned about human resources than you perhaps were a year ago, and you are certainly more concerned than the survey in a whole. When we come to cyber risk, I would very much doubt that you would expect anything other than a very high result for this one. In fact, 96% of you have put cyber risk as a growing risk for this year. In Europe and the rest of the survey, that is actually at 98%. And one of the reasons for that in Europe is that just about every risk manager that I speak to anecdotally, when we do the qualitative part of the survey as well as the quantitative, when I do those roundtables with them, to a man and woman, they say cyber risk is their biggest concern because they can't get insurance for it. And they can get insurance, but it's costly. It's not necessarily fit for purpose. And what they're seeing is the insurance companies withdrawing cover, more increasingly withdrawing cover. And they are extremely worried that cyber risk insurance might disappear as a concept because insurers are waking up to some very real risk out there that they might have to pay huge claims that are pretty hard to quantify, and they are withdrawing capacity. Now in Africa, obviously 96% of you, or in Zimbabwe, 96% of you are concerned about it. So that is, reflecting that global picture. We come on to exchange rate risk. And again, this is a question that every year I put into the survey. And my European colleagues always say to me, why do you bother with that? Nobody cares much about exchange rate risk. It's not a real risk. But I always ask it because I know across Africa, it is considered a risk and it's always been high on our list. And I've always felt that if we're doing a global survey, we've got to include some of the risks that are not just a risk for Europe, but are risks for the rest of the world. So when it comes to exchange rate risk, we've got this year, interestingly, 81% of the whole survey has said they are worried by exchange rate risk, which shows actually that in Europe, it is becoming a major concern. If you are dealing with people internationally, you need a steady exchange rate, and that they haven't had that. There's been fluctuation, not as much as we see in Africa, but there has been fluctuation. And again, no surprise that when we come to the Zimbabwe results, 100% of those of you who've answered have said exchange rate is a problem. So that's all the kind of risks and a little bit about the insurance picture as well. What I'd like to do now is just to spend a couple of minutes on risk management and how the risk managers have fared in the survey. Basically, I think judging from the comments that the Zimbabwean risk managers have made, it's a mixed bag. Some of you are saying there's been a lot of improvement. Others of you are saying that there's growing importance for risk management and risk managers within companies. But others are also saying that risk managers have been struggling with managing country risk, political risk, and currency risk. And that probably comes down to a change that's happened that I've seen over the 8 years of doing the Africa survey, where risk managers have gone from being perhaps more health and safety orientated in terms of their risk to now looking at some of those enterprise risk management issues. And that sea change in what you're actually dealing with is probably reflected in that answer, that some people struggle to make that transition, and also maybe struggle for their companies to make that those changes. So when we look at what the lessons are learned, again, from in Africa, in Zimbabwe in particular, there's some of the lessons that you have cited are that you always need to be prepared and to have a fallback plan. Businesses need country diversification. There's a need to focus on material or critical issues. And again, increasingly people are saying we need to plan and be prepared. Some people are saying we should embrace technology. Others are saying this is an opportunity for organizations who are proactive to, seize opportunities that come their way. There's a large number of you saying businesses should continue to invest in disaster recovery and business continuity. So basically the message from all these comments is planning, and to be able to react to a changing world. When we look at how COVID has affected risk management or changed organizations' approach to risk management, in the wider survey, 68% of them felt that COVID has changed the way that organizations approach risk management. And that compares to 88% in Zimbabwe. So in a perverse kind of way, it may be that COVID-19 has actually done risk managers within Zimbabwe a small favor, in that actually it's pushed risk management up the agenda, and organizations have seen the value of risk management in a way that perhaps in the more mature markets, they already kind of recognize that, and risk managers will hire. A lot of the risk managers that I speak to sit on their main boards of major multinational corporations, for example. When we come to asking has COVID proved a boost for risk managers themselves rather than for the how the organization can view it, then 96% of you in Zimbabwe feel that it has. When we come to the European, the global answers, it's 95%. So actually all of you agree that even if it hasn't shifted your position in the organization, it has given risk management a boost. If we look at some of the responses about talking about the big risks which might materialize from the pandemic, again, we see a lot of conversation around cyber and the risk that cyber could become a systemic risk. We also see concerns about the loss of key personnel due to the pandemic, the loss of business due to lockdowns, concerns about the supply chain. And that is an interesting one, because the risk managers I spoke to earlier this year weren't talking about supply chain risk, but the risk managers across Europe that I've been talking to in the past month are extremely concerned about supply chain. And as the CEO of EMIC, which is the British Risk Management Association, said to me just last week, we tend to look at what's immediately in front of us. Therefore, supply chain is a concern. In the UK, we've had no fuel for the past couple of weeks. It's been a nightmare if you want to fill your car up. So suddenly supply chain has become a household conversation. And of course, risk managers are then being asked by their boards, how are you managing these risks? So no surprise that as we do the survey through the year, it does change, the conversation does change. When I look very briefly at the Zimbabwe results, you also are concerned about things like cyber risk, financial risks, the health of the company. How can the company move out of the pandemic confidently and successfully? And tied into that, you've obviously got the financial risk, the human resource risk, operational risks. So there's a huge to-do list for all the risk managers out there. So I'm going to hand back to Tafiri now, if I may, and hopefully that's been of interest. And I know that we're going to have a little time for questions. So back to you guys.
Thank you very much, Liz. Thank you so much for your enlightening survey, which compares us with the rest of the world. Now I'll hand over for the question and answer session to continue. Joe, you can take us through the question and answer session. Thank you. Joe, if you are speaking, you're on mute. We can't hear you. Okay, it looks like we will not be able to hear Joe. Maybe just scrolling through the questions that I have here. If the other colleagues have got questions, please either show by raising your hand or post it in the group. Let me just scroll through. Okay, I think this is directed at David and Samantha, but also Liz. I mean, if you also have a view upon it, you can also speak. It says, quite surprising for mining and energy. Yet one survey showed that these sectors have mature risk management practices than most sectors in Zimbabwe. Maybe you'd want to comment. I think the question there is what we are seeing from your survey and what we seem to know about these two sectors does not seem to tie up. Maybe you can comment. Over to you, David and Samantha.
Thank you, Mr. Nyamazana. Can you hear me?
Please go ahead.
All right. Thank you for the question. I would like to agree with the comment that indeed the mining energy or the mining sector has got a mature risk management practice. But according to our survey, we were looking at the qualifications which were poor. In terms of the practice, maybe I think all of us can be or are familiar with this, that in the mining sector, risk management is not an afterthought. It is not something which they do when they are hit by an incident. Every day when they come into their workplace, they are practicing risk management. So in terms of practice, the mining sector indeed is mature, because even basic things for even visitors, when you get into the mines, the issues of reverse parking and things like that. So in terms of practice, they are quite mature in their risk management practice. But in terms of their qualifications now, because we also found out that when we doing our survey, we managed to actually go to particular mines. As you go in, risk management starts the moment you enter into their gates. But then in terms of the qualification, even in terms of the language that you'll be speaking, they know about what they do, but they don't know the technical terms sometimes, which actually then that is covered in the educational sector. So in terms of the education and the qualifications, they were not really up to standard, but in terms of their practice, they were quite sharp. Maybe Mr. Chimsitu can also add something, David.
No, I think Samantha has actually summed it all. Jenna, just to give a comment to say they're quite good, especially in terms of these issues of safety, workplace safety, and the shake, what you call it, type practices. So that's basically what I can add there. But like I was saying, there is actually more to risk management besides just workplace safety and health measures.
Thank you very much. Colleagues, are there any other questions or comments that you would want to pose? on this or any other of the surveys. Maybe to Liz, we saw that the issue of currency that you talked about, to say in the past it has not been an issue. So specifically in this particular year, what are the sort of reasons that people were now making it an issue in terms of currency risk? What was driving that view?
Well, I think in Africa, currency and exchange rates have been an issue in the past. So when we first started this survey in, say, 2014, 2015, when a lot of African currencies devalued against the US dollar, currency risk went shooting to the top of the agenda. It was a real issue. You had major corporations in Africa seeing 20% drops in their profit because they reported in US dollars, and suddenly their currencies weren't worth so much. And they it looked really bad on paper for them, but when you analyze them, it was about the country rate compared to the US dollar. And currencies like the South African rand, the Nigerian naira were two that really got hit hard in about 2014, 2015. Since then, there's been a lot of recovery from those currencies, and so financial risk and exchange rate risk slid back down the agenda slightly, but was always a higher risk in Africa than in Europe. This year, obviously, post-COVID, everyone's extremely worried about the state of their country's economies and how they'll recover from the pandemic. And so, and a lot of African countries struggled during the pandemic with their exchange rate. So in Nigeria, for example, they stopped foreign exchange. So companies could not send money out of the country for a period of time, whilst the government just kind of tried to shore up everything to survive the pandemic. So those kind of things really played into people's fears across Africa. In Europe, for the first time, obviously we've had the UK coming out of the European Union, and that caused a concern for the state of the pound, which is usually the pound sterling, which is usually one of the world's, sort of stronger currencies. And there was a lot of concern, and it dipped hugely against the euro, it dipped against the dollar. Well, this year, the pound has really recovered against the dollar, painfully so, because it's actually meant that exports became quite difficult for UK companies, because if they tried to sell anything overseas, it was costing the people who were buying it a lot more money. So therefore, exports were dropping because of that. Just in the past couple of weeks, the pound has fallen back against the dollar. So the kind of the key of that is that it's been uncertain again. When people know what's going on, they generally speaking are quite happy, and they don't really worry about the risks, because they kind of can, even if it's a problem, they can manage it because they know it's a problem. What they really can't handle is the up, down, up, down. And even in Europe, people are now seeing up, down, and they're worried about it. But, in Africa, that's always been a concern.
Thank you very much, Liz. And maybe coming back to David, for you, for the surveys that was undertaken by NAS, what would you say was the most surprising of results, or a thing that you got to know of, which you either didn't know exist, or it was just surprising to you, and why? Hello, David? Okay, maybe Dave is thinking about it. Samantha, from your point of view?
Mr. Nyamazana, thank you. I think when we undertook this research, I think the most surprising thing for me, or the discrepancy, was in how I viewed risk management and how it was viewed by different people. Because for me, I guess almost also being an academic and also teaching in the department, I thought people knew that insurance does not mean it's just one mechanism of risk management, especially in the financial sector. Because when you talk about risk management, most people were inclined to insurance when insurance is just one element, it's just one drop in the ocean of what risk management is. So that was one surprising thing to me. And also in terms of the difference also in terms of the mining and the energy sector, how according to them, insurance was actually, some of them didn't even know. They knew insurance as far as it interacts with their lives in terms of paying for their cars. But in terms of business, really, insurance, they did not think that insurance was to be talked about when they talk about risk management, because according to them, risk management is the actual risks that cause death and that can cause their production to stop at any point in time. Yet for the financial sector, it was mostly insurance, and for also the banking industry, according to them, most of the people who interviewed, risk management was in terms of exchange rate. According to them, that was their definition of risk management. So I think one thing that I also learned and that I also saw was the vastness or the variety of what risk management means to different people in different sectors, and how other people are actually totally ignorant of what other sectors actually think is important. So it's like every sector has got its own closed world, and there was no really golden thread or coherence in what people would say about risk management, which also kind of made the processing of the data a bit difficult, but we presented it as it was because that was quite a major finding in terms of how different sectors view risk and how everybody has got their own important checklist of what risk is and what risk is not.
Thank you very much. Quite interesting. It's like the story of the blind people holding onto an elephant, and each one saying the elephant constitutes either the tusk or the tail, or the other part of the skin. So quite interesting. I don't know whether David is back yet or we've lost him completely. Okay, maybe from Liz, your side, I mean, what from the results that you just shared with us, what could you say besides the currency issue, where like the highlight or the surprising, sort of finding or outcome of your research?
Well, I think for me, one of the surprises is that political risk. For 8 years, that has been the #1 risk. And yet this year, not so much. And yet you would have thought that with the kind of COVID fallout, as I say, in the UK, for example, we're faced with a lot higher taxes. There's rumblings, there's climate change protesters on the streets, there's the Afghan situation and an increased concern about terrorism. And there's all these things going on, and I'm surprised that political risk isn't higher up the agenda. And I think when I look at Africa, the same. It's going to be interesting to see what happens. We had the South African riots. Are people concerned that there might be more riots, or is this a sign that they think, oh well, riots is a kind of occupational hazard? Or are they thinking, actually, our governments have settled, we're actually in a better place, we've had some good elections across the continent in the past couple of years, there's a bit of stability, we haven't been hit as hard by COVID as some of the other countries across the world, so maybe there hasn't been that kind of anti-government feeling. But that one's a surprise, because usually it's so high on the list.
Thank you very much for that insight. I think as we come to our closure, maybe the panelists can start thinking about what are their parting comments that they would want to share. Meanwhile, I'll read this posting that has been made by one of the attendees. They say, I'm seeing that a number of disciplines are incorporating risk management courses, e.g. Human resources degree programs are now studying behavioral risk management. In engineering, risk management is quite key as well. So from your side, Samantha, are there any parting shots that you would want to share with the team?
Thank you, sir. Maybe from our end, the research was quite insightful and interesting. And we've also seen like what the comment that you've read, that many corporations are now incorporating risk management. I think one thing that we were chatting about with David the other day was we would really be interested in seeing that since the other corporations are incorporating risk management, even in terms of learning, in terms of courses, in terms of workshops, would want to maybe do a survey of how behavior actually affects the implementation of risk management strategies, and even the issues of different frameworks, talk about solvency, Basel, and the corporate governance framework, how behavior might actually influence the implementation of risk management strategies. So from our end, I think we'll move forward in that direction. Thank you.
Thank you very much, Samantha. It's very heartening to hear that you intend to do much more, which will obviously enlighten the profession and the way we look at things. Thank you very much. Liz, from your side, any parting shots from you?
No, I've got no parting shots except to say that whilst we've been talking, you might be pleased to know that Zimbabwe has come off the UK's red list. So travel from the UK to Zimbabwe is now legal again, which I think is fantastic news, because maybe we can get back to some kind of life as normal. So it's nice thought to leave everybody with.
Thank you very much. It's better than a parting shot, I suppose. Free to travel, as long as you've got the exchange risk is still there, you will have to deal with that when you travel. Colleagues, I don't see any other questions or comments, but all I have to do is to thank the organizing team, which has led us to this position where we're able to talk about. It would have been nice to get in terms of comments and questions and all that much more than we actually got. I don't know whether people struggled with the chat box, but we'll see how we can improve. So I think when we go back to our WhatsApp group, let's just share in terms of our thoughts, in terms of how this went down, so that going forward we can actually improve in terms of what we do. But we really appreciate your presence, particularly our presenters. Every one of you is appreciated. Thank you so much for the insight. We hope to continue engaging with you so that we can learn and also improve the way we look at our discipline. Thank you so much, and we'll meet at the next session. Godi, you can confirm that the plan is to have another session in November at some point.
Yeah, sure. We are actually getting on the ground to make sure that maybe end of November we have another session. Thank you.
Excellent. Thank you very much. All that is left for me is to wish you now here in Zimbabwe, we have to wish everyone good night. It's evening now, and we wish you a safe, have a great weekend and a fantastic remainder of the year. Till we meet next time in November. Thank you so much, everyone.